Hi guys, Harry Otis here, professional trader for 20 years now. Started my career in 2005, still alive in 2026. Okay, so today, Tuesday, pretty much an okay day. Everything is market barely flat, still within this consolidation zone. We are Tuesday, the 28th of July, but of course, the big news is that the Fed is meeting tomorrow. Will Warsh be hawkish? Will he be more dovish? We don't know. I suspect slightly hawkish. We'll see, but it doesn't matter. Okay, we'll talk about why it doesn't really matter, or what we should actually look for as traders. Okay, because yes, it does matter, but we have to look at it from a different lens as traders, and we'll discuss what that means coming up. Of course, let's talk about the technical picture first. We're still neutral. We're still in this chop zone. Everything is neutral. Okay, this market is still holding on. Okay, despite what's going on in the semiconductor space, which we will get to as well. Okay, so technically speaking, we're chopping in the zone, neutral, and that's pretty good. Okay, sentiment. What do we have here? Back into the fear. We're still on the fear gauge, close to high, still on fear. I suspect that if this market does go down, okay, we'll get to extreme fear very, very quickly. Okay, so technically speaking, neutral. But the positioning of the sentiment on the fear end is positive for us bulls. Okay, so let's get to the Fed tomorrow. Okay, this is the big news. Okay, what do we see on the FedWatch? Remember, okay, the FedWatch for July 29th, 68%. Okay, we say that if it's 2/3, if it's 66.6, 67%, it's almost a done deal. Okay, so they're probably going to do nothing in the meeting going forward. They will not surprise. Okay, so let's see what in store for September though. The September, it's 55% chance for a hike. Okay, one hike and 20% chance for two. So only 23% chance if they stand pat. So it's maybe they're going to do it. Maybe they're going to go. We're going to see if we get closer, depending on how Warsh talks this through. Okay, so if he's a little bit more hawkish, we could have this choppy sideways action to down up into the Fed meeting and going into September, October. Okay, so depending on the headwinds of Warsh and his speech, we could be in some type of consolidation to down move in the next couple of months. But mentioned it yesterday, for August, I still suspect we have like a flattish type market. Okay, it all depends on the war. Okay, because it's all the inflation and the war is what is driving the hawkishness from Warsh. Okay, so let's talk about that. We saw the FedWatch tool. They're probably not going to do anything tomorrow, but it all depends on the press conference, how he is going forward. If the market looks forward, okay, what his tone will be. Okay, and don't get fooled by tomorrow's action. Okay, we have to see the real move in the market is going to be 2-3 days and a week later. Okay, that's how we know what the market is going to do. Okay, so we talked about oil, because of the inflation, down again today, big. We said that this could possibly be the lower high that we were looking for. And yes, it looks like it is. Okay, it's at $79 a barrel, another 3% drop. Okay, this bodes well for the inflation front. So given the fact that maybe Warsh might actually be dovish, remember, the positioning is hawkish. Okay, everybody is hawkish, and that's what we should look at as traders. We have oil going in our favor now, although it was up before, so it might be a flattish type of move yet to be seen. Okay, I still think oil goes down and inflation goes down. Okay, so there is an outside chance that if Warsh sounds dovish tomorrow, if he talks about the oil going down and we have to pause a bit and in our thinking about hiking rates too quickly, it could be too quickly to hike rates, then this market rips. Okay, we break out of this consolidation zone and into highs. Okay, but we don't know yet. He might still have to talk tough. Okay, talk tough because he wants his credibility to be, solid. I just don't think he can. But let's see. He could raise once and then, be done. Who knows? These are very, very weird times. Okay, we don't really know. This is a very weird situation. Okay, however, my consensus outlook, my average outlook is that we stay choppy until we get over this. And I don't think he does anything crazy before the midterms. That's what I think is going to happen. Okay, so today we also had gold. Oil is down, but gold is down too. Gold is actually more scared of the Fed than in the oil market. Okay, we see that gold is still consolidating down today because it's anticipating a hawkish Fed. Okay, so this tells us the positioning in the market. The market is leaning hawkish towards the Fed. Okay, that's important to note because that means if any kind of dovish move happens, we're going to have an explosion on the opposite side. Okay, gold is going to rip and so is the market. And if he does act hawkish, we might get one more down move before gold and the market going back up again. Okay, this is why I like SPY. I think even if he sounds very hawkish, it goes down, but it won't be a lot before we get into the extreme fear. Okay, it won't be like a devastating move that is coming out of nowhere. This move is anticipated. The hawkishness is anticipated. So that's how we have to look at it as traders. Okay, even if I was hawkish rates, I wouldn't make a huge bet. I would make a short bet and get out of it quickly. Okay, but you never know what's going to happen. This is completely a question mark. We know for sure he's not going to raise this meeting, but what about next meeting? Okay, we have to see. Okay, though, if you look for the dovishness because we are positioned on the hawkish side. So the trade is to the other side. Okay, who cares whether you're hawkish or dovish? You have to recognize that the positioning is on one side, and if he talks a little bit dovish, it's going to rip the other way. So you go with it. Okay, that is the trade. If not, it goes down. I don't think it goes down too much because a lot of the hawkishness has been priced in. Remember, we have two rates. What is it? FedWatch. Let's go to the end of the year, December. Basically have 1 or 2 rates priced in. Okay, for sure a hike. 90% chance for a hike. That's what it's pricing in. Not going to necessarily happen. Okay, so you know where they're positioned. Okay, the money is, if you see something that's not like the positioning, you go the opposite way real quick. Okay, so that's my thoughts on the Fed. And we have to look at some of the trades that we have today. Well, I'd like to look at it because one of our stocks announced today, BE. Okay, remember we were short BE going into earnings. I wanted it. I only had a half position. We shorted a put around these levels here. We shorted the 135 put for $5, and it looked good. And then going into the meeting, and what did we announce today on the earnings? You can see that, well, it's tough to see here. It swings to profit. Okay, you can see it better here. Okay, the earnings, they're expecting 41 cents. They got 78. They beat by 90%. And the revenue, they got $1 billion in revenue and they're expecting 827. They beat by 29%. So Bloom Energy destroyed the top and bottom line. So I don't know if you guys can see it, but it's trading at 182 after market. Okay, up. Okay, so maybe our options here will expire worthless. I hope it goes down in the next couple of days because I want to enter more. Okay, I really want to buy this stock. Okay, so at least I got a little piece of it here, but I would like more. And it was only half a position. I was hoping it would go closer to the end, down to our position, and we can sell the hundreds or the 80 calls or something. Okay, do some kind of bullish trade. Okay, but unfortunately, it's at 184 now, so we're just going to get our profits here. But a little asterisk is this is what's happening today. Okay, tomorrow, we don't know. We can go down. We could open down. Remember with Intel? Intel was showing a gain of $10 post-market after its earnings, and the next day it was down $10. So you just never know how it opens the next day. But this is an encouraging sign. It just shows that Bloom Energy is a good fundamental stock printing money, and you want to go along. Okay? You want to pick a good fundamental stock that is temporarily on the decline to buy. That's how you should play this market. Okay, so yeah, Bloom Energy, that's what's happening. We're looking to enter, but I don't know if we will. We will see as the days and weeks go forward. I will keep you guys up to date. Okay, so yes, we talked about the Fed tomorrow, but we also have on Thursday PCE inflation. That's big too. Okay, it's after the Fed, so they won't be able to like incorporate it into their analysis. But maybe the Fed will look at last month's inflation and see that it's falling. Okay, and they will talk dovish. I think there's an outside chance of doing that. Okay, I think that the market, and there's an opportunity because the market is so positioned on the hawkish side that if he like really overplays or starts talking about the falling inflation numbers of last month, that would be a big thing. Okay, especially since now he has oil going down. Okay, this could be another, he said, well, oil looked to be in trouble, but now it's going down and inflation is actually falling. It's negative inflation, so deflation. So maybe we should like put a little pause on the hikes. It's going to be massive. Okay, I'm not saying that happens. I'm just saying that the market is positioned
hawkish. So any kind of dovish move will rip it. Okay, so that's what we're looking for. And remember, a slew of earnings tomorrow. We have Microsoft, okay, which is basically sideways, okay, and we have Meta tomorrow, again sideways, same thing everywhere. Play it non-directionally, like we said, and Apple on Thursday. That's the better one. That's the one that's like ripping at highs. Okay, so that's the big news of this week. Okay, we need the Fed. We have the double minefield tomorrow, and earnings of like big tech to see if the trade is over. And before we leave, I'd like to say that SMH was destroyed today. Okay, it literally filled the gap that we were hoping it would do. Okay, down what 4%, 3.5%, and the SPY is up. Like we keep saying, the SPY is outperforming. It's again another sign that it's showing strength despite the leading sector down. However, I would like for this sector to sort of find its legs, go find a bottom before ripping. Okay, if there's good news on the Fed tomorrow, we could get like a gap. We could like start ripping higher immediately. We don't know. I don't know what happens. It's just that we're still looking for this market, this ETF, to find a bottom. Okay, and when that happens, then the SPY could really go up because this is an anchor. Okay, it's the same story. It hasn't changed. Okay, and that's why I'm loving how this market is consolidating at highs, doing well, bid, despite the leading sector, semiconductors, taking a hit. Okay, so that's all I wanted to say. Fed tomorrow is important. Slew of earnings and inflation coming up on Thursday. All right, looking forward to it, guys. Later.